Hey everyone, John Henry here from School of Trade, and today we're going to be taking a look at a short trade here on the Russell. Actually looks like it gave me a split fill there. Got one off at 87 and then three of the rest of them off at 87.1, so it actually gave me a little bit of a better fill on one of them. But regardless, I'm looking short right now, 87.1. Let me get my stop above the high here, just get that in place. Go for contracts. And then the target for this one, I'm looking for this to fall right back down to consolidation lows 84.3. So that's going to be the target for everything. Now you could leave one more contract on there, but really the overall move that I'm looking for is just to push back down. The idea behind this is it's been a really kind of sideways day, but we have had a downward bias. You can see we have made a couple new lower lows, and we kind of formed this little area of consolidation that came at the previous kind of little structure area there. Bounced around a little bit, fake break the lows, shot right back up into the range, and now we're fake breaking the highs. And the reason I'm saying fake break the highs is just because the way that it's setting up with a downward bias, I'm not expecting this to go much higher. I'm expecting this to revisit those lows again. So I'm hopping into the downside here, 87.1 just after this little candle here. I did get a split fill, so three of my contracts are going to come off with a profit of 28. I'm sorry, one of them is going to come off with a profit of 28, and then three are going to come off with 27. So one tick extra if we do make it down there. It just gave me a little bit of a better fill, so not a huge deal there. But if we do get pushed all the way down there, we're looking at 109 ticks down to the downside here. Potentially a beautiful move lower, catching a really nice reaction. Now we are at the consolidation highs again. We're retesting this level, and if you're conservative, you're going to take a little bit of profit off here. This is an area that you think, that you're expecting us to bounce at least a little bit. For me, I just based on the way that this is looking, after a fake break of the low, if this is a fake break of the high, we should go right back down to the low. So I'm going to be a little bit more aggressive on this one and gun for that lower edge down there at 84.3. So we're in short right now, 87.1, well, three of them there, and then one at 87. Stop is up at 88.3. Looking for all of our contracts at 84.3 is our target. So we'll be back in a little bit and see if they can push it down that low. All right, we're coming one tick away from our target. Got two filled, got one more. There we go. Perfect. So we got all of them filled down there at those lows, and now this is the area that you're going to expect it to bounce a little bit. This is a really important level for the buyers to hold. If the buyers do hold this level, then you'd expect it just to reverse right back up to the highs and then just continue up a little bit farther. If it does end up breaking down, you could catch a little bit of a larger move, but that's on a day like today going into Thanksgiving here in a couple days, it's not really worth the risk trying to hold on to one more just to give back a bunch of profit when I can just take everything out here at the low. You can see that immediate buying reaction right there, huge reaction at those lows. So glad we got out there. Took a total of 109 ticks, got three off at 87.1, one off at 87, and took all of them off at 84.3 down at those lows of consolidation there. A beautiful little trade, fake break of the low, led into a fake break of the high in a downtrend. Perfect place to sell right back down to the lows. So 109 ticks on that one. That's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.